Hi traders, you're welcome back to the Forex Geek channel. In this video, we are going to be talking about best chart patterns for swing trading. Okay, so swing trading is all about catching short to medium term price movements and making the most out of market trends. But how do you know when to enter or exit a trade? That's where chart patterns come in. So in this video, I'll just show you the best chart patterns for swing trading so you can spot high probability setups and improve your market timing. Okay, these patterns help traders identify trend reversals, breakouts, and continuation signals, making them essential for anyone serious about swing trading. Stick around because by the end of this video you'll know exactly which patterns to watch for and how to trade them effectively. Now, swing traders rely on technical analysis to capture price movements that typically last from a few days to several weeks. Unlike scalping or day trading, swing trading focuses on larger price swings, making chart patterns one of the most powerful tools in a trader's arsenal. These patterns tell us a story about market psychology, where buyers and sellers are placing their orders, where price might break out, and where a trend might reverse. Okay, so whether you trade forex, stocks, or crypto, these patterns work across all markets. All right, now let us dive into some of the best chart patterns for swing trading that every trader should know. All right, the first pattern that we are going to be looking at is the head and shoulder pattern. Okay, the head and shoulders pattern is a classic trend reversal pattern that signals a potential shift in market direction. A standard head and shoulders forms at the top of an uptrend, right? It forms at the top of an uptrend, and when the price breaks below the neckline, you can see we'll have a shoulder. It's kind of like an M pattern, right? Not necessarily an M, more like a double M, an inverted W. No, that's even an inverted W. It's kind of like I don't know what shape to call this, but you can see just that's the reason why it's called head and shoulders, because it literally resembles, head and shoulders. The mid part is on top, and then the two shoulders, this is like the head, these are the two shoulders, then we have the neckline. Okay, so if price breaks below the neckline, breaking below the neckline confirms a bearish reversal, and you can see we actually had a bearish move to an extent, right? And then after a period of consolidation, you can see that the bearish move continued again. Okay, the opposite is called an inverse head and shoulders, which signals a bullish reversal. Okay, that's when the head and shoulders are now inverse. It's now going to be something like this. That's not going to be for a bullish reversal, because in that case, it's now then we're going to have the head lower, and then have the shoulders. So in this case, this is going to be an inverse head and shoulders pattern. All right, now we also have the double top and double bottom. Okay, this the double top and double bottom pattern is also a popular pattern. It indicates strong levels of resistance and support. A double top forms, like what we can see here, a double top forms when price hits the same resistance level twice, like what we can see happen here. 1 2, he hits it twice and fails to break higher. So this is a bearish signal, right? A double bottom, on the other hand, is when uh price tests the same support twice, right? The same support level twice and bounces. This is a bullish sign and often leads to an upward breakout. Okay, then we have triangles, right? We have triangles. Triangles show market consolidation before a breakout. We have an ascending triangle, which is bullish. An ascending triangle, let's just see if we can find an example. Okay, I hope we do. All right. Okay, I think we have something like this. Just gonna change the color of this so that it can be easy to identify. All right, so we can see that we have something like that. An ascending triangle basically is when the price is making higher lows before breaking out to the upside. So we can see that we had higher lows here. The upper section was kind of stable. It's just a horizontal resistance, and then we have a higher lows. So that's why it's called an ascending triangle, and then eventually had a breakout to the upside. Okay, then we have a descending triangle. Descending triangle, as the name implies, it's just the opposite. It's where we have we have a support level, and then we have price coming down. So that's what we call a descending triangle, forming lower highs. All right, then we also have a symmetrical triangle. All right, symmetrical triangle is, remember, ascending triangle is bullish, descending triangle is bearish. Then we have symmetrical triangle, which means that price is coiling. Okay, let's see if we can find such example. It means that price is coiling. Okay, let's use this, right? You can see symmetrical triangle, lower highs, higher lows, then it's forming at an trying to meet at a midpoint. Okay, and the breakout can go either way. It could be a breakout to the upside, as in this example, or it could be a breakout to the downside. Okay, so always wait for confirmation. Then we also have flags and pennants. Okay, these are continuation patterns that form after a strong price move. Okay, a flag is a rectangular consolidation that slopes against the trend. All right, a rectangular consolidation that slopes against the trend. While let's see if we can find such an example first. Okay, I don't think this is exactly a flag, but okay, let's see. Okay, I think we have kind of a flag here. It's a rectangular consolidation. Can you see this is the flag pole, right? And then can you see this resembles a flag, right? You can see the shape looks like the shape of a flag. That's the reason why it's called the flag pattern. So it's a rectangular consolidation that forms against the trend. Okay, so this is going to be a bullish flag. Then a breakout usually happens to the upside. Then a pennant is looks like a small symmetrical triangle. So after you have the pole, then you will usually find something like a symmetrical triangle, right? Usually find something like a symmetrical triangle. So this is called a pennant. Okay, unlike the flag that is more like a rectangle, this one is like a triangle. Okay, and then we could have a breakout to the upside. So this is going to be a bullish pennant. Okay, so when price breaks out of these patterns, it often continues in the same direction as the original move. Now we also have the cup and handle pattern. Okay, it's a bullish continuation pattern that looks like a teacup. All right, now that pattern may not always, easily come around, but let's just see if we can find such an example. All right. So this is an example of a cup and handle pattern. Uh, in order not to waste so much time looking for the exact pattern directly on my chart here, I just had to go find a sample. All right, so we can see that the cup and handle pattern is a bullish continuation pattern that looks like a teacup. Can you see? This is the cup, this is like the handle. All right, it's price forms a rounded bottom followed by a small pullback, which is the handle, and then when price breaks above the handle, it signals a strong bullish momentum. Okay, so now that you know the best chart patterns for swing trading, here's how to trade them effectively. Okay, so you have to wait for confirmation. All right, never trade a pattern before it fully forms. You have to wait for the breakout or the breakdown and use volume as confirmation. Okay, whenever you find a pattern, ensure that you wait for a confirmation first before entering your trade. And also combine with other indicators. You can pair these patterns with moving averages, RSI, volume indicators, just to improve your accuracy. Okay, and ensure you always set your stop loss. Always use a stop loss to protect your trade in case the pattern fails. And then do not forget to use multiple time frames. Check the pattern on a higher time frame to confirm the trend before taking a trade. Okay, mastering these swing trading chart patterns can give you a serious edge in the market, whether you trade forex, stocks, or crypto. These patterns help you identify key entry and exit points with confidence. If this video helped you, smash that like button and subscribe for more trading tips and strategies. Drop a comment below and let me know which pattern you use the most. Thank you for watching, and I will see you in the next one.